We keep hearing this is a bear market that will bring us down into a crushing recession. Yet 80% of the companies reporting earnings are now beating expectations. Will someone explain this to me? I'll explain it to you. The Federal Reserve isn't the only stimulating apparatus in this economy. The federal government has been stimulating the death out of this economy, which is going to drive up interest rates. But it's going to be hard to go into a recession with stocks doing this well and the federal government stimulating the economy as heavily as they are. This is not financial nor professional advice. This video is for entertainment only. Microsoft had an excellent earnings report, and they noted that adding ChatGPT, the artificial intelligence, to their Bing search engine really increased the search engine results a lot.
Shares on the move, as we mentioned, in overtime after reporting Q3 numbers, fiscal Q3 moments ago. Joining us now for more is D.A. Davidson's Gil Luria. Gil, in particular, Azure here, Microsoft Office, kind of performing strongly, but the consumer business maybe a bit stronger than some might have feared, right, given what we saw last quarter.
That's right. One of the really notable items in the earnings report is that both the device and the Windows OEM lines are declining less than they did last quarter, meaning we may have found the bottom on those businesses. And let's not forget, at least the Windows business is a very high margin business. So it's very good news for Microsoft that they bottomed there and that the rest of the way for this year looks to be even better.
Who else is it good news for, though? And I'm going to get you a little bit out of your area here, but I think for investors, the read-through is important. We've got Intel later this week. AMD is out there. There are so many different players within the ecosystem that involves consumers and PCs that have been telling a story about strength in the second half, but perhaps investors haven't believed them. Is this a little bit more of a reason to believe it?
It could be, and that, let's not forget that little company in Cupertino that sells these types of devices as well. This could be a little bit of a good sign for that whole consumer electronics ecosystem. But another thing that's really stands out in this Microsoft report is 13% growth in its search business. That is a significant acceleration from last quarter, and guess why that's happening? Incorporating chat into Bing is clearly something that's driving growth in that business in an environment that digital advertising is not growing. So the fact that Microsoft is accelerating there is also very notable.
All right, so key things you want to hear from the conference call, and just as importantly, with the stock popping 4% right now on these results after hours, do you buy in here?
Yes, we do, because I'd say since they beat on almost every revenue line in this report, it's indicating something very important, which is enterprises are consolidating their spend around Microsoft. Just this quarter, we stopped using Zoom and Slack and moved to Teams. We're seeing that happen broadly. Enterprises are consolidating around the big tech providers, and Microsoft is right in the middle of that.
Microsoft was around $275 at the close of the day before earnings were released. After the earnings were released in the aftermarket, it went up 23 points. It's important to remember that Microsoft is the second largest company on the S&P 500, so its results carry a lot of weight. Another major mega cap, Google, reported almost nothing but good news. And I was especially pleased to hear that their search engine didn't seem to be affected by Bing's increased revenue. And so they're doing well with that competition. And people are still seeing Google as the go-to search engine, which I feel that way exactly. And I was especially glad to hear that YouTube ads were doing somewhat better.
This is a good news report, Mandeep, isn't it?
It is, and I think a lot of the fears around core search business were overblown. So they handedly beat the core search estimates by about $1 billion. So a clean beat, and that's what translated into an operating profit beat. And look, I think ChatGPT, a lot is made about, what it could do to the long-term margins and search volumes. But right now, I think Google, as we know it, continues to be the dominant search player. Yes, it could have an impact in terms of the gross margin profile, and I do think it will have an impact. But in terms of the ad stack and the ad spend, it's still advertisers will still go to Google for the highest ROI on their ad spend, and that's what we are seeing in this print.
Okay, so dominant market share continues to be a story for Alphabet, but what's also a story for these big tech companies is their use of cash and how they're managing their expenses, which feels a little bit weird when you think about how that was not part of the appeal of these kinds of companies. And on that front, Alphabet is buying back shares. It's also authorized the buyback of up to $70 billion. And it's also taking more action in streamlining its expenses. Were there any kind of expectations built into that?
There were, because they announced a 6% layoff at the beginning of the year, and clearly that could have generated about $4 to $5 billion in cost savings on an annualized basis. So you do expect that to translate into better capital allocation, and that's why they're increasing the buybacks. I do think they will have some gross margin headwinds later this year because of the higher infrastructure cost tied to ChatGPT, and that probably will be bad news, which we'll find out in the earnings call, because YouTube, again, it raises your infrastructure costs. Now the search infrastructure costs are going up, so from a gross margin perspective, they will have headwinds for sure.
I am curious about just the advertising revenue overall. I mean, obviously, this is the crux of the business. It has held up. It is still coming in above estimates. As a pure play advertising company, which, let's face it, a lot of people still view Google as that here, why are they holding up better than some of their competitors?
Well, so think of, the ad pricing for Google ad slots is always most resilient, and Google has the broadest advertiser base. Meta is more indexed to small businesses. They're more focused on retail and e-commerce. Google is diversified. So this is actually a reflection of how well the economy has held up. And we talk about, soft landing, but Google is indexed to GDP, US GDP, global GDP. And right now it's a reflection of advertisers continuing to spend on Google, and there is no alternative when it comes to the ROI on ad spend.
I do want to get your thoughts on YouTube and the YouTube ad space specifically. This has been a consistent bright spot. It's still a relatively small part of their business compared to the others. But investors have really had their eye on this, wondering sort of what more they can do with it.
And I think YouTube will be the biggest driver of ad sales growth going forward, even though it may not show up in that growth metric right now, simply because YouTube has the engagement. Think of, the streaming time that YouTube has versus the other Netflix or any other streaming players. And right now they are being under-monetized simply because advertisers still haven't moved past, Google Search, for example. They still think Google Search is a higher priority platform. But over time, as streaming and linear TV moves to YouTube, which I think it's going towards, you will see ad pricing go up.
So those are two major examples of how earnings season is probably going to keep going right. Chipotle and Visa also reported excellent results. So, like I say, 80% of the companies are coming out with better than expected results. But to return to the topic of stimulation, this economy is constantly being stimulated. No matter if the Federal Reserve keeps raising interest rates. It started with the health problems and the stimulus checks and the child credits and the deferred student loan payments, which they're still deferred until August, so there's still a stimulation occurring because of that. And in Biden's bill, he wants to cut student debt by at least $10,000. So, the budget that's being proposed is very stimulative. They're giving credits for energy saving and electric cars. Also, the Federal Reserve injected about 300 billion into the economy indirectly by bailing out the banks. So that's marginally stimulative. We're spending lots of money helping Ukraine in its war against Russia. We've spent over $100 billion total for military equipment and helping them with their economy and just humanitarian assistance. So there's just all kinds of ways we've been stimulating the economy. The infrastructure bill, that's trillions of dollars going to be spent over the next 10 years. The Semiconductor Chips Act to encourage companies to make semiconductors in the United States, that's very stimulative. Rents have started to come down and the housing market has come down somewhat, so that helps fight inflation. Gas is below $80 a barrel as I'm filming this, and there was a threat that was going to shoot up towards 100. So that should take some pressure off the Federal Reserve. We get the PCE, the personal consumption expenditures, this coming Friday, and I think that'll be about the same. It won't show any big jump in inflation at the very least. And some of this is just an effect of comparing to the particular month last year. There's the base effects, they call it. So by base effects, it should go up a little bit, and that's all it's going to go up is a little bit. The Federal Reserve is more than 80% likely to increase the interest rate on May 3rd by only 0.25%. And so I see a lot of positive things happening, and I think if we can get this budget passed through Congress, that I think things are going to be okay. The big blocker would be is they somehow screw that up and that doesn't come off the way it should. But I think we have possibly a good setup, or at least a less fearful setup than we had a month ago. Thanks for listening and watching. Be sure to smash the like button and subscribe if you haven't already done that. Hit the notification bell if you want to be notified. And I hope to see you in the next one. Thank you.